Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's November 18th. This will be our chart lesson for the day. And yes, I'm back from New York. Had a good trip, had a good time, and um, I'm a little bit behind on my emails. I've tried to catch everything up that's any more than a day or so old. So I'm almost there. So bear with me if you sent me an email and I hadn't answered yet. I'm still just a tad bit behind on that. Hopefully I'll catch up tomorrow. If I get a chance tonight, I may read some more, but I'm still trying to catch up from my time change and being on vacation and all that. But had a great time. Enjoyed going down to Wall Street. I got some pictures and things, and maybe I'll probably put up a little report on the website later in the week when I get some time, when I get caught up, and maybe put some of the pictures up there. Um, Love going to visit. Wouldn't want to live there permanently, but it's a great place to go visit. And Wall Street's a really neat place, and being in this business, it holds a certain mystique, and it just gives you standing there right in front of the stock exchange is pretty neat, and standing there um, at the Bull is pretty neat. So I got some pictures of some of that stuff, and I'll put them up on the website here in the next few days, and that's really about it. Everything is pretty is looks like it. We had some movement while I was gone. Not, looks like we sold. We had a couple of flat days, but we had an up day, a nice up day on this day, whatever day. I think this was Monday, and we had some sell off. It looks like we had some movement on Friday as well. So it looks like you had a chance to make some money on while I was gone. Um, and today was a great day, so you definitely had a chance to make some money today. I see a two-tiered channel. At first, I thought it was a spiking channel. And I actually was looking at this as a two-tiered channel like it is, but I had this a little tighter. I had this a little higher, like so, and this a little tighter here to get the measured move. And you can't really say that's wrong. It still fits well, but that's how I originally had it, more like that. Um, but in the end, I just kind of moved it out. Still fits about the same. Doesn't Not much difference. You still get the break in basically the same place here. But this was right at the one. There was an FOMC announcement today, and this was right at the FOMC announcement. So I didn't mark anything. This one was even really close, but I liked it. Um, but I didn't feel comfortable taking anything else after that. And by the time it settled down, you had one more trade before 2 o'clock. So not a lot of trades marked today, but this is a great two-tiered channel working higher. I wasn't sure if it was a spiking channel at first, but it turns out it's just a two-tiered channel, and you still can look at it as a spiking channel. So I did have one short in here, and really this one was supposed to be green. Going to change that to green. Should have already changed that. I think I got everything else correct in there. But let me back out. We'll talk about the trades. Probably move pretty quickly today because I'd like to try to read a few more emails before I go home today. I'm doing it a little earlier than normal. It's almost 5 o'clock, but I've got some other stuff I got to do as well. So I'm going to move through this one pretty quickly today. It's pretty straightforward. It's just all uphill, really. We went a little flat here, and then we went a little flat before we went into the FOMC announcement, which is pretty standard, but we're not really trading down. We're just moving sideways here to the other side of the channel. So, but let's talk about the trades. First trade I saw was right here. Notice we got a new low. We got a big surge up, a first entry pullback, a failed second entry short that reversed. Just go long right above that bar. You might have used a limit order here because you're really close here. So if you want to use a limit order, that's okay. But I'm okay using a stop there just simply because it's a failed second entry short after a big move up. You're probably going to get another leg up, and you may get a measured leg. And so when you measure that and you look at it, your target's up here, and you see we got right there to it before we kind of tried to sell off. We ended up going higher than that. So um, that's what I would have been looking at. But nice long right there. Again, you can use a stop because it's a failed second entry short trap, or you could let it break higher and try to get in a limit order. Sometimes you're going to get left behind on those limit orders, but hey, better safe than sorry. I'd rather miss a trade than to push one and force it and have a loser. So always keep that in mind. Um, then we pulled back here. It's like a breakout pullback long, and when it couldn't go lower there, and all you got all that congestion across here, that's telling you something. If this one hadn't broken lower, I probably wouldn't have liked going long here because it is congestion. But this is like a little failed break lower, and it's a reversal bar. Just go long right there. Quick, easy scalp. Then it pulls back, and it gives you another one. I didn't like this one, though, because it's so close to the high, and it may just hit a tick or two and then turn down. Because we did have a shorter term trend going on at that time. You didn't have the bigger picture. All you had was this trend line working up. And you've had a break, and you're so close to the high, it could just tick a tick higher and turn down. So I didn't like forcing that one. I think you were better off to wait and see if you got a failed second entry short. And that came right here. This is really not a failed second entry short because it did reach a scalp coming down. But you can treat it the same. It's two attempts to go lower, and this still made a higher low than that one and this one. So I like going long there. And notice what it did. He had a real bearish bar, and it broke lower and then turned up. We know we can't go short right there into an EMA, but a lot of people don't know that. They don't know any better. So I bet you a lot of people got trapped right there, and then it broke lower and then turns and goes higher. Just go long right there. Or if you want, you could even wait on this bar to finish and break above it and then use a limit order. Notice it broke higher and worked back. And so that's another way to play that because that's not a great signal bar. But because you're kind of treating it like a trap, and it is right off a possible trend line right there, and you could have had that trend line because if you drew it off these two and drug it down, it fits right there and you're bouncing right off of it. So there's some reasons to, this kind of confirms the trend line. So there's multiple reasons to like this one to the upside. And this one kind of takes off. And then you kind of start working down again. What you're waiting on is it come back to this trend line. And if that's a midline, see if it comes back here. It works through, so that tells you something. This one was real close to being green. But you've got a little trend line working right across here like so, and you got your break, moved to a new low, and then you bounced. And plus there's also some support right across there. Notice that this is a little trading range really right here as well. I'll just draw the line so you can see it. You can see that little trading range. That's a failed break lower, so it's good for a scalp coming back. It's a second entry long. There's two legs down. Then it comes back. And when it touches there again and turns down, I didn't like taking the first entry, but when it went higher and turned back down and went out the other side there, that's a second. You can treat that like a second entry short. It's like two legs up. It gives you a break of that trend line, but it pretty much confirms it at the same time. So now you're just looking for prices to make a new low and then maybe bounce. It does that right here. This one is real close to being green, but notice we had a break and two legs down to a new low. And again, you had some support right across there. It's like a little failed break lower again. It's a little failed break below, and it's a bounce off this lower side. So you're probably going to work back up to here, and you may get a reversal because now you've had your break and two legs down, and it's pretty much two measured legs. It may have come up a tick or two short. And at that point, I still had my trend line up here, and so it's a bounce right off that trend line, and that's why I liked it. I only adjusted this later in the day as we got more price action. So, like I said, it still works the same either way, except you get more touches right here than you do down there where I ended up with it. But I really think it was tighter at first, and it just kind of expanded a little bit, and that happens sometimes. So, but this is almost like a repeat pattern of this over here. It's similar. And then you get a failed second entry short here. I didn't like going long right there because now you kind of got a double top and it may break higher and fail. And it looked like it did. It actually did break higher and fail. But I don't think you want to be going short after a break here and a new two legs down. So just kind of sit tight And notice what it did here. And I noticed at least one other trader recognized this because somebody sent me an email today on this. He recognized that it went right through, and he was asking me if I thought this was a good place to go long. I think he actually went long right here, and I told him you're better off to wait here where you get the failed second entry short. Because notice the new low, first entry, pull back second entry, and it fails and turns up. And it actually fails a couple of times there, but this is more congestion, and then it breaks down, and you still got this um, support line right across here. So it's a little double bottom on top of that. And that's the one I like, and look out, rockets off. And then you get two legs back and another bounce right off the EMA. This is not a perfect signal bar, um, but it's a failed second entry short too. This is a double bottom, so you can treat it like a new low. Pull back first entry, pull back second entry. So it's blue for that reason, plus it bounces right off the EMA. I liked it, and it's actually like a second entry long on a failed, on a breakout pullback long. Notice this comes across here, so that's like a little breakout pullback long right there. And you can see that it breaks higher and it gives you a second entry. So I like that one. Did I skip the short there? I know I moved it out of the way. I can't remember if I talked about it. I hope I did. Second entry short. It's a little bit aggressive because we're trending up and that's the first break. But it's notice the pullback first entry pullback. It's like a failed second entry short, and it did confirm that trend line. I figured we would probably come down to this lower trend line. So, and it's a little bit flat across there, so it was okay to go short. I think I already talked about that, but in case I didn't. But anyway, we just finished that one. Now we run higher again, and at this point, what you want to do is you want to measure this first move up and then see where a measured move from there takes you. And that takes you all the way up to right here. We ended up going much further than that today. But evidently the market liked what the FOMC, what they had to announce today, because we rallied out of that and kept going higher. So, but you notice we got real close to that. That would have given you your first target. I'd be flat before that news came out, to be honest with you. It's not worth riding even a good profit into that because there's too big a chance you lose it back. But we ran up, we pulled back, this is like a breakout pullback long right here. It's a second entry long, a nice bullish bar. You really can't use this first bar. You got to use this one and use it for your signal bar. Your stop would still go below the red one here. And that's a quick, easy scalp, and then it runs back down. I like this one because it's a little failed break lower, but it also was a bounce off the trend line. No matter where you had it, whether you had it here or not, it's still a bounce off the trend line. You can see that. Like I said, I ended up adjusting it later. But it's another second entry long, right off the trend line. It's getting right in there in the noon hour. So this is probably the last one you want to take before 1 o'clock. We're really going sideways now. We're in one of those trading ranges that we usually get in right before FOMC news comes out. This is generally what it'll look like for an hour or so because everybody gets scared and stops trading. This gave you a nice opportunity, and then it just kind of went flat. And the news came out right in here somewhere around 1 o'clock, and you can see it jumping up and down. But I don't think you want to enter there. You can see the price action still worked. The range held. It went higher, and we kept going. And then it pulls back, and it gives you a bounce right here. I like this one simply because you got a new low here. It's a first entry, second entry. And even though it doesn't fail, I mean, you got this trend line working down, you get a break and a new low. And if you put your trend line back where it was before, it's a bounce right off of it. So I like that one for a long. And that was really your last trade. You had a chance to enter before you got into the 2 o'clock hour. And since the FOMC news had come out. We were just starting to settle down right in here. So, um, but yeah, I like this one for a long because we had the break here, moved to a new low, and then we reversed, and you had a nice little reversal bar. You don't know it's going to take off like that, but you figure you're probably going to test this high because that's a big move up. And I would at least, we already showed you one way to get a measured move, but I'd look for one right here too. And that's going to give you a target of right back up here at the top of the channel. And you can see we even went higher than that. So that would have got you a nice profit there as well. So, and that's what I saw today. It's pretty much all uphill. We had this one short that was kind of a trap there as we worked back to the other side of the trend channel. And maybe the channel is right here. Maybe I had it right earlier today. It still fits there rather nicely. So it doesn't really matter how you saw it. You still got the break right here at the same place. And then you would have looked for a couple legs up before we started rallying, but this next leg just kept going. So, so in the end, I moved it down. And that way you don't really have a break, and it still fits really nicely there. So you can see that. It doesn't really change a whole lot other than it might have given you a little more leeway on why you wanted to take this trade. But outside of that, it all works the same. And the only reason I didn't like getting long right in here is it's right at the 1 o'clock hour, and I think it's just too risky. So otherwise, you would have had another long right in here to catch that. But that's what I saw today. Again, I had a great trip to New York. Appreciate y'all holding off on the emails. I didn't get quite as far behind. It seemed like everybody did hold off on the emails, and that was helpful to me. So I appreciate it. And if you're still waiting for an answer, don't worry, I'll get to you. I'm just still maybe half a day up behind or so. So I'll get caught up tomorrow most likely, unless a whole lot of them pour in tonight. But anyway, I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.